Hi, my name is Khairi Kumambe Azmi.
Hi, my name is Muhammad Faris bin Zainal Abidin.
Hello, I am Nur Ami Huzur binti Razi.
Hello, my name is Siti Nurshada binti Masya.
Hello, I'm Amni and I will start the presentation with the introduction of the rise and fall of management accounting. As we know, management accounting are important to an organization or a company because it provides the deep insight details of your company finance and also resource flow, which means you can detect any flows in order to make a decision in a long or short-term strategies for your company future. Imagine if your company did not take serious about the management accounting and you and your company have a huge goals and strategies to achieve, but they didn't realize that they have problem with the inflow and outflow of the company. So do you think the goals can be achieved? Some company can only focus on their earning or sales of the company, but they did not pay attention about the measurement cost of the production. By adapting management accounting correctly, it can help to figure the measure based on economic value that occur in that period. So move to point number 3, state that management accounting reports are of little help to operating manager attempting to reduce costs and improve productivity. They require managers to spend a bit of time in understanding the report that have things to do with the economic and technologies. This is because nowadays most of the company use high technology for their production because it will save more time and also can cut costs of the production. For example, labor costs. If the company use high technology, they maybe need a supervisor to supervise the machine whether they run smoothly or stuck in the process of the production. They also must have an engineer and mechanic to repair the machine in order to maintain the productivity. So point number 4 said that the management accounting system fails to provide accurate product costs. Simple metrics such as direct labor are used to distribute expenses to goods, but they do not reflect the demand that each product places on those firm resources. For financial reporting purpose, simple and aggregate product costing procedure are sufficient. Move to point number 5. It states that managers' horizon contract to the short-term cycle of the monthly profit and loss statement. The financial accounting system usually treat that cash outflow as expenses even though they will give a benefit in the future. For example, expenses such as improved maintenance or expenses marketing and also employee training can give benefit to the company by helping in increase the production or sales. Managers usually want to achieve the short-term goal by reducing the expenses, such as discretionary investment. So what is that? It is expenses that can give benefit in the future period. For the period, for example, like I said, employee training, marketing, and many more. For today's management accounting system, it failed to provide the relevant set of measures appropriately, which means the relevant set of measures in the management accounting system do not reflect the technology used nowadays. Also did not suit the competitive environment in which the company operates. Financial measurement also as return, such as return on investment, which are originally established in this country to help the manage the numerous activity and have become the only causes of success of the organization. So, for the challenges in the rise and fall of management accounting are, they must provide timely and accurate information. As the economic growth, there will be changes in the today's technology and also currency exchange rates. The raw material prices also will be changing due to the demand in the current period. So it is important for an organization to have an accurate information so that they can easily manage the cost and also to measure and improve the production process. Pricing decision, introduction of new product, abandonment of obsolete product and responses of the appearance of the rival products can all be made with the greatest available information on product resource demands if management accounting report correct product costs. For large organizations, they require the system to motivate and evaluate the performance of their managers. So how can they use the system to evaluate the performance? So, the management accounting system also can be as a two-way communication between the senior and the subordinate managers. The senior can explain the goals and objectives of the organization and ensure that the managers know what to achieve. The management accounting system also can be a channel where the information about the company product performance and also the production efficiency will be reported to the upper level of the management. By that, they can decide the compensation and promotion to be given based on the numbers reported in the management accounting system. Last but not least, the effectiveness of management accounting system depends on product that meet the customer's need, efficient product, and also the distribution system of the product. However, even the best effort in product creation, process improvement, and marketing strategies might be thwarted by an ineffective management accounting system. When dealing with an efficient management accounting system, the optimal outcome happens when the managers recognize the system insignificance and design personalized information system to circumvent it. However, danger occurs if managers fail to recognize their management accounting system flaws and fully rely on it for managerial control and product decision. That's all from me. I will pass the presentation to Khairat Ikmal.
Thank you, Amni, for explaining about the introduction and the challenges. Now, it is my turn to explain about the opportunities. The opportunities of management accounting started when the demand is increasing at one point when the cost for collecting, processing, and reporting of information was decreasing and started to decline. The user's direct control of digital computer in the operation, which may result in high quality of performance in their business operations. It is because the information can only be recorded in real time for analysis of operating performance. In highly automated environments, virtually every transaction can be captured for subsequent analysis. Users' highly automated machine, which may combine with local area network, can provide a continuous status report on the work in process. The sophisticated electronic technology like extensive systems can be used to help the reporting and controlling system to be more accurate in measuring the resource demands made by each product in diverse product line. Timely and managerial performance measures can be computed and disseminated throughout the organization. Now, I will explain about the management accounting's roots. The history of management accounting system started in early 19th century where virtually all exchange transactions only occurred between an owner and individuals who were not part of the organization. For example, labor paid by piecework, raw material suppliers, and customers. These transactions in the market were easily obtainable. There were no such levels of management. Owners only needed more cash from sales to customers that was paid out to suppliers. After the Industrial Revolution, hierarchical organization created a new demand for accounting information as conversion processes, which formerly were supplied at price through market exchange. A demand arose for measures to determine the actual cost of an output from their internal operations. However, in the middle of 19th century, great advance in transportation and communication, especially the invention of railroad and the telegraph, provide further opportunities for gain to large hierarchical organizations. This enterprise could now coordinate the acquisition of raw materials and the distribution of final products. It were necessary to provide summary measures of performance for decentralized and dispersed managers. Further advance in technology of management accounting systems were made in conjunction with scientific management movement. This movement was started in metal fabricating companies during the last 2 decades of 19th century, where the goal of the scientific management was to improve the efficiency and utilization of labor and materials. Furthermore, the physical standards they developed, such as labor hours per unit and material quantities per unit, were easily converted into standards for labor and material costs. The final developments in management accounting systems occurred in the early decades of 20th century to support the growth of multi-activity, diversified corporations. These corporations needed to coordinate the diverse activities of a vertical integrated and manufacturing and marketing organization and deciding on the most profitable allocation of capital to these different activities. The most important and the most enduring management accounting innovation was the return on investment, which it provides an overall measure of the commercial success of each operating unit and of the entire organization. Only top managers use return of investment to help direct their allocation of capital and to evaluate the performance of the operating department. Nowadays, decentralization was necessary and each operating division required its own staff function to support its activities. Thus, central managers were now in the position of providing capital to diverse operating units and attempt to coordinate, motivate, and evaluate the performance of their divisional managers.
Today I want to talk about loss relevance. By 1925, all management accounting practices that are practiced today had been developed. These practices had evolved to serve the information and controls needed by the managers. To increasing their complex and diverse of organization, but the pace of innovation seems to stop in the middle of 1920s. Perhaps there was little incentive to continue to develop innovative management accounting system because the corporate organizational forms by successful companies such as DuPont and Process Technologies by General Motors to prove to be model of many corporations for the next half century. After 1920, the evolution of management accounting system still did not keep pace with improvement of corporations. This eventually led to the problems which restock product costs, delay overlay aggregate process control information, and short-term performance measures that do not reflect increases or decreases in the organization economic position as corporation line, which is expanded as production technology change as product lifecycle global competitive. And most importantly, the great advance information technology occur. We should have expected consideration of a decision to not invest in a more relevant and more timely management accounting system. During 20th century, the dominance of external reporting when calculating the cost of goods sold and value the inventory cost. They insist on using the historical transaction recorded in the firm ledger balance, which ignore the real market value at the time. For the academic led astray, academic focused too narrowly on a simplified model of firm behavior, influenced strongly by economists' one product, one production process model of the firm. Management accounting academics found little value in the cost allocation imposed on organizations. They are very persuasive when illustrated in the simple one product setting used by academic economists and accountants. They never fully address the question of where fixed costs came from and how these costs need to be covered by each of product and never implement these ideas in the environment of actual organization. with hundreds or thousands of products. Secondly, management accounting systems become less relevant and less representative of the organization's operation and strategy. It is because many companies become dominated by senior executives who believe they could run the firm by the numbers. Lastly, lacking knowledge and uncomfortable with their firm's underlying technology, it will be impact the project short term, especially on the earning per share and return on investment. That's all from me. I will pass to Shuaida. Thank you.
Thank you, Faris. I will continue with accounting for caravans. Back in the 15th century and the publication by Fra Palicio, some events had been occur which lead to demand for accounting information. During that time, Venice were trading goods with other countries. One of them is India. The traders purchased the tea and sold it in Venice once the goods were sold in India. The accountant compute the profit for the entire trip and that need to be distributed among the investors in the venture at the end of the expedition. There is a probability that the investors or the Venetian did not ask the accountant to compute the expedition's profit during the third quarter of 1487. It is because during that time, investors realized that allocating the whole profits of expeditions to a 3-month period was a pointless effort. Based on these expeditions, the investors would most likely be interested in learning about the caravan's success during the third quarter of 1487. For example, how far did the caravan travel and in which direction did it travel? How many provisions are still available? What is the state of the inventory that will be transported? At that time, there are a number of potentially relevant indicators of the caravan manager's performance. However, quarterly profits are not one of them. There are certainly many better measures of a company's short-term profitability than quarterly earnings in today's competitive technological market. Cash flow is crucial, and we like to understand the pattern and structure of a company's cash receipt and expenditures. Alright, now it is the time I would like to talk about the importance of innovation. Management accounting systems may and should be built to support the organization's operations and objectives. Technology exists to implement systems that are vastly different from those already used in. Experimentation and communication can help to overcome any lack of knowledge. Creative managers and academic researchers who are dedicated to generating new concepts for designing applicable management accounting systems should channel the spirit of innovation that characterized the scientific management movement 100 years ago. That's all from me.
Thank you for
Thank you for
watching.
watching.